What's up, guys? This is Sunday, prep day. Showing you my TradeZilla. We passed our combine. If you saw my previous live trade, we were getting pretty close. Now, for some reason, I cannot get the data on this last trade that I did, but the last trade that I did was an $1,100 trade, and that closed us out. So these are our stats for our combine that we passed for Top Step. Pretty dope. Pretty dope. It worked out pretty good, and this is trading only 2 minutes a day. That's what's crazy about this. 2 minutes a day. So, as we can see these stats, we're just going to go over a couple days. You can see we're just putting in a couple trades here, there, green weeks. And then we had our first bigger loss day. Actually, this is a normal loss day here. I don't know why it says 6 trades. We might have put on a couple and then quickly closed them out. Who knows? I was struggling a little bit with psychology, just a little bit. And the idea was for the 2 minutes a day, if you can spend less time in front of the chart, typically you are conserving your mental capital, the ability to not tilt, the ability to just stay in a sweet spot. So that's the idea with this trading strategy. That's the theory. So as you can see, we just put on a couple trades. This was a tilt day. I'm not going to lie. I sized up on a trade and had 2 losses. It wasn't full tilt. It wasn't like I was banging my head against the wall or anything like that. It was just one of the trades I put on. It was kind of a chase trade. I was like, I'm going to make some of that back, and I ended up just losing more. So it is what it is. We really followed our rules here, did really great. Now, I have to say that these 2 days were not the 2-minute days. These 2 days I spent a little bit more time on. I think I just had time during my regular work schedule. So Wednesday, Thursday. So I ended up just kind of kicking open the charts a little bit more. But nonetheless, here we are. And then for the 15th, on Wednesday the 15th, we had a bomb day. We had a banger of a trade. Let me see here if we can get down to the 15th here. This is the 15th. Yeah, so on my previous, I think it was my live stream, on my previous live stream, if you were watching, let me just remove all these drawings. This is the 30-second chart, but let's just take a little look at the daily here. So if we were to look at the daily, I was talking about how this area here, so we were to draw a little box here, this, to turn it red, this area here, from here to here, with this little overlap right here, that little overlap. I don't know if you can see that overlap. You should be able to. I wanted to short the market. That was my area for shorting, somewhere in that range. So I ended up taking a short. I think let's zoom into the 15th, and let me see where this lines up at. This lines up roughly 172 to 254. Okay. 172 to 254. So 172 to 254. All right. So we came into this box like this, and I was looking at this day overall. Let's look at the 5-minute real quick. So again, 30-second, 5-minute. And this is how we were able to catch a big trade here. I'm going to remove these boxes because we don't need them anymore on this side of things. I was looking at them on the 15-minute. Let's go to the 15th. 15th is here. All right. Here we are. So when I saw this day, this isn't really crazy strong buying. I know it's ripping straight up, but it's not how I would expect a slow grind day to be, right? Just very kind of like a tight channel that's not, I don't know, very difficult to describe. We'll probably draw this channel more like this. It had a lot of like retracements in the candles. That's the way I'm basically saying it, except for this one. This was a buyer stepping in here, right here, right? And that's notice where liquidity was at. Boom. Tapped into that liquidity right there. People can call that a fair value gap, whatever. It's fine. It doesn't really matter. Bottom line is that was the liquidity for the buyers. And that's where it continued to shoot up. So buyers were trying to take this up all day long. But when we got up into this range on the 32nd, we are looking for just some kind of retracement. this is an intuition trade. I'm not going to lie to you. If we were to look at the volume profile for 630, this is what we've been trading, volume profile. We bring it all the way up over here. It's very kind of messy. See how choppy it is through this volume profile. So this is suggesting to me that all of this could get ran through very quickly. And then this would be our first kind of area where we should find a bounce in this little low nodes here. I still did want to play it all the way down to point of control, but I only needed 1100, and I figured if I could catch, 100 points on this, shoot, it's doing well for our risk management. So what I decided to do is when it got up to about 50% of this box, the area that we had blocked out, 50%, I took a short right here. And then I thought, I'm going to put my stop above the box. I think I put it up to like right above 80 or something like that. And then this came all the way down to this low node, right there off this shoulder. And then when it went up a little bit more than that, I actually took another short towards the very top. Same stop, and we marked it all the way down there. So I think I was in for about 5 to 7 contracts, which is kind of heavy actually, because I'm risking roughly 55 points. So that's about $100 a contract, about $600 we were risking on this trade to make 1100. And I think it was a little bit more than that, but in general, I had to stop it at 1100 because that's all I needed. So that was the trade we took on that one. Now this one wasn't a part of our volume profile trade, and we could have taken some other longs here, but it was fine. That was it. We finished. We passed. That was it. So now fast forward to today. And again, this was off the daily. This is off of a daily zone, the supply area. So that's how we're able to capitalize on that. Let's look at the last couple of days on our actual account. Now, I really try to start my accounts. You'll see all these old archive accounts I had. This is our current one here. And yeah, here we are. So these are our 2 days trading. My first day, I had 8 trades, a little bit of over trading right in the beginning. We actually were down like, I think 700 at one point. 200 loss, 250 loss, 300 loss, 330 loss, 430 loss, 570. So we're down 570 at some point here. And notice how often this was happening, right? So this is me already, the psychological switch to trading live is already being demonstrated. So I ended up taking a couple little hits later on, and then we had our nice trade. I came back at 11:30 and we had a nice trade. So this is me kind of getting back into my bearings here. And now, again, I don't think all of these trades are bad per se. I was just trading too much of an area. It happens, man. So that was Thursday. Friday, this is kind of like a mean reversion day. Market makers are wanting to move the market around a little bit for their advantage. So we ended up making just 100% clean trades that day, right? Very, very, very clean trades. Let's look at a couple of them. So just a quick recap. So how we did this, let me remove these drawings here. We looked at the 5-minute. Sorry, we don't look at the 5-minute. We can't look at the 5-minute, but back to Friday. Where is Friday? Here is Friday. Okay, so pre-market high and low. That's what we mark. Pre-market low, pre-market high. We know we're in a bullish run here. We've been in a bullish run for the past 3 weeks. It's been insane, especially with this news. That's why I'm not surprised to see us gap down. Probably, what is that? That's only 300 points. It's not even that big of a gap down with that straight news, that Hormuz straight. Let's see, up to here, man, it really ripped up. So we have a really, really wide range, pre-market range here. Really, really, really big. From here to here, that's 400 points. That's insane pre-market range. But still, typically, we're going to want to stay long. That's kind of what we want to be in the picture of. So we took our volume profile, pinned it at 630, woke up, made our first trade. I think our first trade was at 8 o'clock roughly, because that's when I I get up at around 7:30, 8 o'clock, and I just pop on. Let's see here. 8:05 was our first trade that we put on, a tiny one. This might have been me still dealing with some psychology, right? Still dealing with a little bit of psychology, not following rules, and me just controlling it, being like, all right, we need to cap out of this. So yeah, I was only in there for 3 minutes and 30 seconds, and we were trying to find a better position. But a little bit later on, we ended up catching. Let me see if I could find, where's our trades at? Is this our trades for the day? 417. Here we go. A nice few trades here. I don't know if they were long or short. Let's see. Let's find out here. Assume. And look at the timing. My goodness. I see it on the main dashboard, but let's look here again. All right. All shorts. Wow. Bullish day in all shorts. That's pretty crazy. I don't even pay attention, but yeah. So being that it was short, that's very interesting because typically we don't want to take too much short trades going into that market like this, a big bull market. But let's look. We looked an hour later. We would try to take a little trade at 8:05, but we didn't like the context. 9:08, that's our next trade. All right. So looking at this and how everything's shaped here, I think we took a short right off of this area right here, this little point. Now, I'm going to be honest with you guys. This is kind of not the best trade. In general, there's still kind of sweeping up. But at the same time, if we were to take it and draw from this point, we kind of hook down a little bit. So this could be viewed from this point more of a D shape, from this point more of a C shape. But what's really attractive is these steeper edges here, how steep these corners are. So I believe we took that short off of that steep edge. Let's see where our fill was. Our fill was at, that's not it. Go back. So 908 short at 855. All right, let's see here. That's about where we put it. See that? 855. So we took the short here. I believe I just put the stop at highs with a little bit of room. And I think we played it back to point of control. Let's find out. 825. So we went for 30 points. 25. All right, right here. So why did I put it to 825 instead of point of control? Well, if you see this range here, we're kind of chopping a few points below and a few points above, right? So I figured I could squeeze out a couple more points out of it without this shoulder, because this shoulder looks a little aggressive to the upside. So we got that trade, dialed it, got a beautiful exit, a really nice exit actually. We pretty much almost top ticked and bottom ticked that short. Boom, boom. And then we let the market run again. So all of this in mind with auction market theory, with this volume profile chart, we're able to have these little scalps. And for the most part, when I put a trade in, I'm kind of done with it. I don't look. I put my limit orders in and I step away. I don't want to spend time there, although sometimes I do. And I probably will over the next few days for sure to maximize profits. But yeah, seems like we have two of the same trades here. I think what happened here is I got filled. I think I market ordered these right here. I market ordered these. So that's why it's saying 2. So entry was 26,835. Huge short 26,738. So 835 next bar entry. So let's look at here. What time was that at? Time was at 10:16. Let's fast forward. Let's see what we're looking at 10:16. All right. 10:16. Now, what I'm noticing is I'm noticing the market having a hard time getting up out of this range. We kind of had this big kind of flag and these bars are really wicky and choppy from here on out. And as we're starting to break out again, this is kind of another intuition trade. Because I know on Fridays, market makers don't want this to shove up. When we have multiple weeks of just ripping, right? We went from 23,000 to 26,000. That's just insane. 10% gains. Market makers are losing a lot of money on this. So they're going to want to shove this back down on Fridays. That's just what they want to do. Notice this Friday right here's a red candle. Big rip, shove it down a little bit. Let's see if they had to cover big on this Friday. Notice that it's getting smaller as we get to Friday. They're limiting their losses. They're getting squeezed. Then we come up again. They're getting squeezed again. And then this Friday, I knew that at some point, these market makers want to shove the price down. They want to get some control over the markets. So that's what we were banking on. And then we saw this huge flush down here. Boom. And then it's starting to flag. This is looking a little bearish. Now, I'm trading theory. This isn't really rules. But in general, if we are above pre-market high, this line here, I don't want to be short. But considering the context of this day, considering the context of how the market's moving and how it's having a hard time breaking out of this area, I decided to short the markets. So looking at this, we shorted 835.50, which would have been right here. 835.50. We want it to go down. Right there. And I think I market ordered it in because I opened my laptop. I looked at this price action. I looked at the area. I saw we're kind of below point of control again. Or I'm sorry, running into point of control again. I'm assuming these guys got trapped up here twice. These bulls got trapped again. And it's going to put a lot of pressure on these buyers here. So these are trapped bulls up here. Going to put a lot of pressure on these buyers down here. They're going to have to find new buyers. That's exactly what happened. So we market ordered 2. And then for my stop, we wanted this liquidity node right here. This is kind of what I was banking off of. This is where I think the market's going to kind of magnetize to. It might even bounce from. So let's have a look here. $738.75, $738.75 right here. So we put it right off this shoulder, 738.75. Oh my God, these entries. I can't believe how good this exit is. It's insane. 2 beautiful exits. I mean, to be honest with you, these are so uncomfortably perfect that we could have been a couple ticks off and it ran up and almost stopped us out. You know, both times. If we didn't get this exit here, if we just put our take profit like at 20, it would have stopped us out. And then same thing again here. If we didn't put it there, I think later on during the day, we would have been about break even, but we would have lost a lot of profits. So 2 really good trades, really good context. And then in general, these areas, because of volume profile, we're able to get very accurate entries and exits. I really did think that if the market was going to come here, it was going to have a big rebound. I was looking at this area right here, and it just didn't quite get there. This would be for entries. So for exits, I'm less picky. I don't need to tap into this range here for an exit, even though I know liquidity is going to be stepping in here. But I do want to be here and very picky if I want to get into an entry, if I wanted to go long. So be a little less picky with your exits. Be very picky with your entries. This is going to help you a lot with your risk management and your overall P&L. So that's it right now. That's how we're looking. That's our kind of recap for our current account. So our current account, we've only taken a few trades, profit factor of 2.1. That's fantastic. And much more to come past our previous combine. So we're in the Express accounts now. And yeah, here we go. Let's see what tomorrow brings. Now, very quickly, if we were to look at this from a daily candle, just to kind of keep some things in mind. We broke out, and I think we hit all-time highs. Yeah, the NASDAQ. This is still going to be an area that's going to be tough to get above. It's still going to be tough to get above. I'm assuming, let me just have a quick little look here. Let's look at some liquidity places of liquidity. This is pure technicals, by the way. If there's some major catalyst, it's going to be much different. Let's see what else we got. We got this one here, and we got this big stretch here. So I'm going to assume, looking at this, I'm going to assume that we come back down to probably a point of control somewhere around here. If we're to look at all the volume, this is probably where we're going to come around to. If we tapped above it, we could come back below, maybe in this area here. I think we retrace at least to 26,000 before ripping. Yeah, maybe 26.2. I think that this is very realistic. Oh, another separate one here. I think this zone right here, I think we can come back down to that yellow. So I'm going to keep these lines on the chart, and I want to document them because it's pretty important. Now, if we end up coming down past this, again, this is the NASDAQ. If we end up coming back past this and we retrace all the way back down, this is your hot spot right here. This overlap is your hot spot. This is where there's going to be a bounce. This is where you should find buyers unless there's like catastrophic news. There's like a major catalyst. But if things are relatively the same, that little square here is your concentrated buyers. We're going to call that extreme demand. All right. That is your extreme demand right there. If you've seen my stuff on, what site do I forget? TradingView. If you see my articles published on TradingView, the Cafe Trader, you'll see that I write a lot of my stuff out like this for you guys. So in general, looking forward to tomorrow. We're going to start a live stream at 7:30 in the morning, and we'll